Today, I want to talk about where we're finding the best income opportunities in the municipal bonds market as we head into 2026. After a volatile few years, 2025 marked a major shift. Interest rates finally started to move lower and a record-breaking amount of new bonds hit the market. This reset means that for the first time in a long while, income investors are actually being well paid to take on a little bit of selective risk. And so I'll walk through three areas we think matter most: high yield munis, muni closed-end funds, and long duration munis. For investors seeking higher income, the VanEck High Yield Muni ETF, ticker HYD, and the VanEck Short High Yield Muni ETF, ticker SHYD, are key strategies to watch. In 2025, we saw spreads widen in this space, meaning the extra interest you get for taking on risk increased. Now, this happened mostly for technical reasons rather than the actual health of the cities or projects issuing the bonds. But essentially, a record-breaking $500+ billion in new bonds hit the market last year. Because there were so many options for buyers, prices reset to more attractive levels. And even though these bonds are tax exempt, their yields currently compare very well to the taxable corporate high yield bonds. So historically, municipal bonds have much lower default rates than corporate bonds, being an added bonus. So by using strategies like HYD or SHYD, you're getting attractive corporate style yields while maintaining the stronger credit safety of the municipal market. Now, the VanEck Closed-End Fund Muni Income ETF, ticker XMPT, provides exposure to municipal closed-end funds, an area that stood out as rates began to come down. There are two main things driving these funds right now. First, they tend to hold long-term bonds, which gain the most value when interest rates fall. Second, many of these funds use leverage, meaning they borrow money to invest more. So as the Fed cuts rates, the cost of these funds to borrow money goes down. So when those borrowing costs drop, more of the income generated by the portfolio can flow directly through to the investor. Looking into 2026, we expect funds within the XMPT portfolio to continue finding opportunities to rotate into these higher paying bonds, making the income generation even more efficient. And if you're looking at the long end of the curve, bonds that mature decades from now, the VanEck Long Muni ETF, ticker MLN, is a primary way to play this turning point. After some years of underperformance, long-term munis regained their leadership in 2025 as interest rate expectations shifted. And so the real story here is kind of talking more about the after-tax yield. So as what we saw at the end of 2025, long-term high-quality munis were yielding around 4 to 4.5%. Now, for a top tax bracket investor, that's roughly equivalent to earning 6 to 7% on a taxable bond. So that puts the high-quality bonds in MLN on par with, and in some cases ahead of, those riskier taxable sectors. So this allows you to choose higher returns without having to sacrifice on the credit quality. And as we move through 2026, we believe the municipal market remains in a sweet spot. Yields are still elevated compared to the last decade, and the underlying financial health of the cities and states remain very strong. Whether it's the high income potential of HYD, the efficiency of leverage strategies like XMPT, or the tax advantage yields of MLN, municipal bonds offer a flexible toolkit for income-focused portfolios. For more insights and perspectives, visit us at VanEck.com.